Good morning and welcome to Charting the Markets on Wednesday, the 15th of November 2023. Yesterday, softer than expected US inflation data, consumer price inflation data that is, came in much lower than expected, both on the core and on the headline figure, which led to a sharp rally in equity indices, with US equity indices rising by between 1.5% and 2% yesterday, and Asian markets also benefiting earlier this morning. And we can see the follow-through on that on the daily FTSE 100 chart, where we also earlier this morning had UK inflation come in lower than expected with regards to its core and headline inflation number, and basically showing that the government's promise of halving inflation by the end of this year now having actually been met. So as you can see here on the FTSE 100, from a technical perspective, it's also very interesting because we have broken through this tentative October to November downtrend line and have risen above the early November high at 7,484. And if today we can have a positive close above that high, then for me that would mean that the corrective phase we've seen at the beginning of November is over, and that we can now extend our upside momentum and take us all the way back up to the red line here, the 200-day simply moving average at 7,607, and then probably also back up again towards the July to October highs between 7,702 and 7,747. So really bullish momentum here, and yes, short term we are consolidating around the orange line here, the 55-day simple moving average at 7,503, but that is not surprising as we've got US producer price inflation out later on today at 1:30 p.m. UK time, and the question there is, will that also be surprising to the downside or not? But irrespective of that, if you look at the S&P 500, actually, let me just look at the German markets first, at the DAX 40, you can see here also a very sharp acceleration to the upside. The DAX rallying by 1.75% yesterday and continuing to advance, whereas the FTSE gave back some of this morning's early gains. And you can see here that we are now trading above the red line, above the 200-day simply moving average at 15,656, and also, more importantly, above the mid-October high at 15,575. And if today, on a daily chart closing basis, we can close above that high at 15,575, then from a technical perspective, we formed a inverse head and shoulders pattern here, and we also probably formed a major reversal pattern, which would then mean that we could not only head back up to the late August and September highs between 15,992 and 16,044, but potentially head much higher towards the July high at 16,532 on this daily financial bed. So things looking really bullish at the moment. Also with regards to the DAX 40, yesterday we had the German ZEW economic sentiment out, which came much better than expected as well, and is back in good positive territory now, having in the past been in negative territory. So things are looking pretty good. Short-term support is the mid-October high at 15,575, and below that we've also got the mid-September low at 15,561, but any short-term slip should actually hold there over the coming days. And if we look at the US markets, we can see here that the S&P 500 is on track to basically test its early September high at 4,540, as expectations, because of that lower reading of US CPI data yesterday, being that the Fed has probably now ended its rate hike cycle, and investors basically expect the Fed to cut its rates for the first time in May of next year, all of which has really boosted risk-on sentiment and has led to equity markets once again surging higher. As you can see here yesterday, a very nice upsurge here after the already strong gains we have seen since the late October lows at 4,104, and so far we've risen in the space of these 2.5 weeks by over 9%. So things looking technically very bullish here. Also, the upside momentum surge we saw yesterday is very likely to take us into these September highs between 4,516 and 40. And maybe short term we could consolidate there, because after all, it's normal for markets to consolidate as they did last week after the previous week very strong upsurge here. And since we've risen very sharply so far this week, I wouldn't be surprised if we short term are capped by that resistance area. But over the medium term, we should eventually take out the 4,540 high on this daily financial bet. That is to say the late August and September highs, and then head up again towards the July high at 4,607. And support can be seen along this uptrend line here going back to the end of October. That currently comes in around 4,117. And below there we've got the mid-October high at 4,398. The US dollar came off by over percentage points yesterday against a lot of major other currency pairs, as the US consumer price inflation data came in much weaker than expected, both on the headline figure, but also with regards to core inflation, and both on a monthly and on a yearly basis. And if we look at the euro dollar, the euro has gained versus the US dollar on that weakening greenback, and as we can see here, we've left the uptrend channel line we had been trading in since the beginning of October, and have also managed to close above the red line, above the 200-day simple moving average at 108.05, and also above the July low at 108.34, all of which is bullish for euro dollar. And it basically means that we are now on track to reach the late August high at 109.45, and also the late June highs at 110.12. So this is the next upside target for euro dollar, and here support can be seen around the basically the lows going back to the end of June, and the 200-day simple moving average between 108.34 and 108.05. Now, cable, the British pound against the US dollar, looks quite similar in that we have also broken out of this uptrend channel we have been trading in since the beginning of October, and have managed to close above the red line, the 200-day simple moving average, at 124.41 yesterday. But today, as you can see here, we're slightly coming off again and retesting this upper uptrend channel line. And the reason for that is that the inflation in the United Kingdom has come in weaker than expected on a monthly and also yearly basis. And basically on that note, the British pound has depreciated slightly. But we have support coming in around the 200-day simple moving average at 124.41. That, together with the early November high at 124.28, is likely to hold any short-term retracement lower, because after all, the sharp upside momentum we saw yesterday with regards to the weakening US dollar is likely to continue in the days ahead. And if it does, we could actually be heading back up again towards the late June lows and also the mid-August lows between 125.91 and 126.17. So that's the next upside target area for the British pound against the US dollar. And this view would only be invalidated if we were to slip through last Friday's low at 121.87, which is a long, long way away from where we're trading at the moment. Now, there is another currency pair which looks quite interesting technically, and that's the US dollar versus the Canadian dollar. And as you can see here, on the back of that softer US inflation reading yesterday, the US dollar depreciated very sharply and basically retested, and is doing so again today, this September to November tentative uptrend line, which we can see here is a dashed line. That is currently offering us some support, together with the orange line here, the 55-day simple moving average at 136.53. But it is quite likely, given the strength of yesterday's decline, that we will in the short term also fall through the early November low at 136.29. And once that has happened, we should also fall through the much more important July to November uptrend line, which currently comes in around 136.18, and head back down again towards the red line here, the 200-day simply moving average at 135.06. So for me, provided we stay below the last reaction low, that's to say a reaction high, I should say, sorry, that is on this candlestick chart, last Friday's high, which is higher than the one made on Thursday and on Monday. Well, as long as we stay below 138.54, technically speaking, it is pretty likely that over the next few days and weeks, we will be heading back down again towards the 200-day simple moving average at 135.06. The sharply weakening US dollar has led to some gains with regards to commodities. But before we look at commodities such as gold and silver, I'd like to talk about the Brent crude oil price. Actually, no, about WTI today, because we covered Brent only a couple of days ago. So let's have a look at WTI, and we can see here the picture is quite similar to Brent in that we had a small bounce back over the last few days ahead of next week's is it actually next week? No, it's the 26th of November OPEC meeting. And as OPEC basically said that the output would be decreasing with regards to the oil price by about 300,000 barrels per day this year, we had a slight rally here over the last few days also on stronger data out of China over the last few days. But today we are still slipping. We basically are remaining below yesterday's $79.66 per barrel high, and are now trading back below the red line here, the 200-day simply moving average at $78.04. Now, from a technical perspective, we remain within a downward trend. As you can see here, we have a series of lower highs and lower lows. And to me, it looks as if, from an Elliott wave perspective, we are in a third wave to the downside. And that would mean that provided we can stay below the early November high at $83.39, further downside should be seen with regards to the oil price. And we could then basically retest all this sideways trading range we were in between May and June of this year, between $74.70 and the $67 area. So that's a large sideways trading range, which we are aiming for. And an indicator of that possibly happening is also that despite better than expected export data from China and growth data over the last few days, the oil price hasn't really risen, as investors are still worried about future demand and the impact it could have on the oil price. So here basically short-term resistance between $79.66, yesterday's high, and the early October low at $81.21. And as I said, as long as we stay below the early November high at $83.39, I expect further downside to be seen. And that could then take us all the way back down again towards the $74.70 and the around $67 area of the coming month. Now, the falling US dollar has led to a surge in the gold price. As you can see here, gold is on track for a third consecutive day of gains. And we have here bounced off the $1,932 per troy ounce level, which was made very close to the red line here, the 200-day simply moving average, which over the last 3 days basically supported the gold price. And right now we're bouncing back up again and have now risen above the early September high at $1,953, which leads me to believe that we could be heading towards the July high at $1,987 over the coming days. And then above there, we've got resistance around the $1,997, 20th of October high, and also the 3rd of November high at $2,004, ahead of the October peak at $2,009. Now, the silver price is also interesting in that it is mimicking what's happening with regards to the other precious metal I just talked about, gold. And here we've seen a very sharp acceleration to the upside. As you can see here, the silver price since Monday's close has risen by nearly 5%. And we are now trading not only above the red line, the 200-day simply moving average at $23.26, but also above this August to November downtrend line. And that is technically significant, especially so if we can close on a daily chart closing basis today above both of these levels, that is to say the downtrend line, the breached one, and the 200-day simply moving average. And it would indicate that we could basically retest the late September and October highs between $23.70 and 77 cents. And if that resistance area were to be broken through, we could then head back up again towards the July and August peaks at $25, 1 cent and 26 cents. Thank you very much for watching Charting the Markets with me, Axel Rudolph. Please feel free to follow me on X. My handle is @AxelR_IG.